We're seeing rates are up, prices are up, inventory is down, but there's talk of a bubble. What's going on? I will address that today in this week's Market Watch in a minute. Hey everyone, it's Ehab, your favorite San Diego realtor with the Hawley Group here at Compass, coming to you from our South Park office. And I wanted to talk to you today about what is happening in the real estate market this month. There's a lot of news going around, a lot of buzz with interest rates, whether we're heading to a bubble, whether we're slowing down, and yet we're still seeing a lot of competition and prices going up. So let's kind of cut through the facts so that you have an idea of what's happening. If you were looking for a home back in December, January, you expected to pay about $850,000. That same home today is now going to cost you $1 million. So that's a pretty significant jump just in the first 3 months of the year. If you were looking for a condo back in December, you would have expected to pay about $595,000. Today you're going to be paying $665,000. So both single-family homes and condos were still up about 20% higher than where we were this time last year. So again, that same home, you're going to expect to pay about 20% more as a purchase price. With all the homes that have sold so far this month, we're seeing about 7 out of 10 homes are getting multiple offers and going over ask, and by about 10%. What that means is that if you're looking at a home and it's priced at $1 million, you can expect that this home is actually going to sell closer to $1.1 million than to $1 million. So you want to make sure that you factor that into your budget when you're out shopping. So that brings us to the second major headline that I wanted to touch on today, and that is what's happening with mortgage rates. We started off the year at about 3%. We're now a little bit over 5. I think somewhere about 5.25, 5.3, somewhere around there. How does that impact you as a buyer? How does that impact you if you're a homeowner looking to sell? If you're a buyer, that gets factored into your monthly payment. So let's say you were out looking for $1 million home at the beginning of the year, right? In January at a 3% interest rate, that would mean that your monthly payment would be about $4,500 a month. Now, if you're still looking for a $1 million home with an interest rate of 5.25, your monthly payment is going to be around $5,300 a month. So that's $700 more a month that you're going to be paying just in interest, or almost $7,200 over the course of the year. That's going to impact what people can afford. What that means to you as a seller is buyers are going to be a little bit more sensitive to price than they were even 3 months ago. So you want to make sure that your home looks great and that you're pricing it correctly to still capture the market. It's still going to be a competitive market, but again, just be mindful that buyers are going to be a little bit more sensitive to price. All right, so now that we've talked about what's happening with the rates, the big question is, what is that going to do to the market? The reality is it's going to slow the market down a little bit, which is a good thing. We actually want to see this happen. What we've been seeing over the last 2 years is really unsustainable. So what we can expect over the next 6 months to a year is the following. One, homes are still going to get multiple offers, but instead of getting 20 offers all in the first weekend, you might see that come down to like 5 or even 3. Still competitive, but not absolutely bananas. 2, we'll start to see inventory build up a little bit. Again, that's a good thing. We want buyers to have a little bit more choice. We want to see the market take a deep breath. We still expect to see home prices appreciate, maybe not at 20% like we've seen over the past year, but at a healthy 5 to 7% rate on an annual basis. That's kind of where our history has been, so that's good to get to that level. And we're already starting to see demand taper off a little bit. Still very strong compared to our historical trend, but not quite as robust as what we've seen over the past 2 years. So all signs are moving that the market is going to start to cool down. It's going to take a little bit longer for homes to sell, but again, it's still going to be a strong market. It's still going to be a seller's market, just not a crazy market that we've seen right now. One of the biggest questions I'm getting right now, and what we're seeing in the headlines is, are we in a bubble? Is the market going to crash? When is it going to crash? What's happening? The reality is we're not. We're not in a bubble. There is no signs that are pointing us in the direction of a crash, and here's why. First off, this is a supply and demand issue. We have too little supply of homes relative to the number of people that want to buy a home. And as long as that relationship stays, it's going to keep the market strong and it's going to keep prices going up. Secondly, banks got burned last time. So they're being much more cautious about who they're lending money to. They want to make sure people are very strong, very qualified. And we're seeing the typical buyers actually coming in, putting in 20% down, and has enough in the bank to cover a year to 2 years worth of payments. So you're not seeing all the speculative lending and the risky lending and the risky buyers going out there. People that are going out to buy are very, very well qualified, and that's going to also limit the risk of a crash. So the big takeaway is that while there's a lot of hopeful buyers out there, a lot of wishful thinking, or a lot of naysayers that want to see the market crash, the reality is the data is just not there. The market is still very, very strong. We do expect it to slow down a little bit and kind of take a deep breath and hopefully give people a little bit more breathing room. But as far as a crash goes, we just don't see it. So if you're looking for, whether you're looking to buy, you're looking to sell, you're looking to invest, or you want to just talk through what's happening so that you can come up with a winning strategy, give me a call. I'm more than happy to talk you through it and help you win in this market like I do with all my clients. All right, thank you for watching, and I'll see you soon. Bye.